Hi everyone, I'm Kyle Wilson, one of the portfolio managers here at SIA Wealth Management, and I just wanted to thank you for tuning into the February Fund Insights. February was an interesting month of cross currents and divergences across North American markets. Within the equities space, we saw actually small cap indexes such as the Russell 2000 and the S&P Venture Comp Index outperforming their large cap peers. We also witnessed gains in economically sensitive commodities like copper and lumber, which posted large gains in the month, as well as energy commodities as winter storms and cold temperatures across the globe not only boosted seasonal demand, but disrupted production and distribution. Within our sectors of analysis, we saw energy equities lead the way for the month, followed by materials and financials, all of which we do have some exposure to within our portfolios and actually helped us within the month within our sub-advised mandates for BMO Global Asset Management. Within this month, we're actually going to take a look at the BMO SIA Focused Canadian Equity Fund to provide a few more insights into the portfolio. Continuing a strong start to 2021, we actually saw a 5.89% return for the month of February. I've actually been really thrilled with the results of this fund so far this year, having returned over 10% year to date, relative to about 4% for the TSX at the end of the month. Diving a little bit deeper into the portfolio here, we did see some higher activity in February and into the first week of March. The broader trend saw us moving away from those alternative and clean energy names that were leading the way in December of last year and into January. And I did mention them in our call last month, but as they kind of fell off, we did see, regular energy names kind of take the place of those alternative names. So within the month, we actually added 3 energy names in Cameco, MEG Energy, and Crescent Point. We also added First Quantum Minerals, Materials Play, and Canada Goose within the month of February. So 5 trades within the month. You can see on the chart on the right, they're still highly weighted to energy at 26% of the portfolio at the end of the month. Materials 20%, followed by consumer discretionary and industrials. At the end of the month, we also had an active share value of 94%, which maintains its above 90% since the inception of the fund. Now, as I had mentioned, we did see some activity continue into March, so we did want to give a more timely snapshot. So the pie chart on the left is the end of the month. The pie chart on the right is essentially the sector breakdown of the current portfolio. And as a result of a series of trades, we've actually increased our position in the materials sector and added another holding there. We also increased our weight to consumer discretionary. And as a result of those trades, we no longer have any exposure to technology, and we put some cash to work that was 1 day delay from the end of the month. Now, why BMO SIA Focused Canadian Equity Fund? You know, we really feel that this is a good complement for advisors looking to add a Canadian equity strategy that has the ability to overweight the strongest sectors in Canada. Currently, we're capitalizing on that commodity strength. We are seeing strength in a lot of those commodity areas, kind of on the reflation trade that is happening, as well as a weakening US dollar is typically good for commodity equities and hard commodities. We do think that this could be a great complement to your other Canadian equity funds. We are highly concentrated and high active share. We do think that we are very different than a lot of other managers with low turnover or a great option for your indexing part of the portfolio. And the biggest, I guess, value add that we think we can add to your process is automating your tactical sleeve. You know, 25% allocation to this particular fund can actually take you in when markets are, I guess, in turmoil from a balanced 60-40 to a more defensive 45-55 equity to fixed income. This is something that we believe is very important going forward, and as Jason had mentioned earlier, could be very beneficial for those clients that are potentially in retirement. With that, I'm going to flip it over to Paul Vendrinsky here to look at a couple of comparison charts.
Thanks a lot, Kyle, and welcome everyone. As Kyle mentioned, the the fund, the Focus Canadian Fund, especially recently, has benefited from strengthening commodities. That asset class, in fact, is at the top of our rankings via the SA Charts equity asset class ranking list. So I wanted to look at a few comparison charts to kind of drive home where we're seeing strength and specifically how that is seen in the various funds. As Kyle mentioned, there's been a lot of changes within the Canadian focused fund into more on the commodity side, which has been a change if you've been following what we've owned over the last couple of years. So first here, this is the US CAD, and this is itself a comparison chart also. And you can see here for the last 10 or so months after reaching that 145 level, or 69 cents in the inverse, the Canadian dollar reversed by 13 or 14%. This has been a big move. And this correlates very well with the strengthening in commodities, as well as the relative outperformance of commodity-related stocks, and also as well the outperformance of Canadian equities versus its U.S. counterpart. The comp as of Friday was up nearly 9% year to date, where the S&P in Canadian dollar terms was up a mere 3.25%. So quite a big difference, and because of those kind of movements, there's not a direct influence, but it's very correlated to changes within the specific portfolios. On the next chart, here's an interesting look. Again, another comparison chart. We're looking at something versus another thing, which is the basis of all of our relative strength analysis. But in this one here, it's a comparison of the XEG, or the cap Canadian equities, versus the TSX composite. What you see with the long red downtrend line that's been in effect for over 5 years now, really showing that energies has been a detractor to the performance of the overall Canadian composite. And when you think of the composite or even the TSX 60, for instance, traditionally you're looking at energy names, material names, and financials, all of which have their turns, but energy has been out of favor for quite a while now. Recently, however, and a few points that Kyle was making, in really starting May of last year, after an exceptional beating really to crude prices where we saw it go negative, we've been seeing a bit of a silver lining, at least with the equity portion, equity holdings, within the energy space. As Kyle mentioned, the strengthening year to date has allowed for some of the funds to benefit from certain names, both on individual stocks as well as certain ETFs, depending on the portfolio. You mentioned a couple of names in the Canadian Focus, Crescent Point, Mega Energy, Whitecap, as well as material names, Cameco Tech, and First Quantum, where we're benefiting directly on that outperformance, whether it's helped by the dollar or not. That's the rules-based approach that allows us to move into that. And then the ZFN, for instance, that's a North American focus, Tourmaline, Ovintiv, Cenovus, Occidental, just a couple of names that are in that portfolio. So there has been a good shift into a lot of commodity-related names, both the energies and materials. And on this last slide we'll look at here, another comparison chart. So this is showing the S&P versus the TSX composite. In this case, the outperformance of the U.S. index has been dramatic for over a decade. The long-term trend remains with the U.S. in favor, but as you may see here, it's kind of hard to see on the very right-hand side, a more recent column of O's that started back in September and is still in favor for the Canadian equity markets. So trend line hasn't been broken, but we're starting to see certain Canadian equities outperforming those U.S. counterparts. Whether it was the foreign exchange, which started at about the same time, or a shift into strength, we've mirrored in various products, whether it's the North American fund, the BMO equity fund, seeing these changes moving from U.S. On the U.S. side of the border, now the shift more into Canadian. The North American fund, in fact, is over 50% right now into Canadian names, and that has been a shift into energy and materials. So this has been a recent and relatively small change between the two. Trend lines are still intact, but it's a great reminder on how we follow our process and how it allows us, we're actually more to the point, forces us to shift into where we're seeing strength automatically. Again, it's rules-based, not emotional-based. So kind of just a few slides I wanted to show you, which gives you hopefully a visual on how and why we've been seeing some fairly dramatic changes to the various portfolios over the last 6 to 8 months.